We are back. Bitcoin just below 100,000. We'll continue to watch it. 98 and change, almost 99. It did hit that milestone, of course, earlier, 100K. And it's not the only corner of the market showing animal spirits, according to our next guest, Renaissance Macro Research Chairman and Head of Technical Research, Jeff deGraaf. Good to see you again. Welcome back.
Hi, Scott. Thanks for having me.
What else do I need to be, I don't know if wary of is the right way to say it, but what else do you suggest is showing what you think is animal spirits?
Yeah, well, look, that's an important part of a bull market. Obviously, you want to you want to be a part of those animal spirits as they're building. You want to be wary of those animal spirits as they get frothy, and I don't think we're there yet. We can certainly talk about that, but we look at a lot of different aspects of the market. One of those being the IPO index, right? So how are new issues doing relative to seasoned issues? Because obviously they tend to be more speculative without the track record and the battle scars, if you will. Those are making new highs. That index looks actually really, really impressive to us. Another aspect of this would be high beta versus low beta names, particularly on a sector neutral basis. So even high beta, say, utilities versus low beta utilities are outperforming, and that tends to be good news. And then finally, just to put a pin in it, is cyclicality. The cyclicals are outperforming the defensive names. That tends to be good news historically. So I like the building of the animal spirits. I do think sentiment can be an impediment at some point, but I think that's after the beginning of the year. I think that's sometime probably starting in February or late January. But until we start to see more evidence of that, I think the signposts are still pointing towards this bull market being intact.
I mean, when does it get excessive? Do you have numbers in mind? I mean, you must in certain levels as a technician. What makes you say, okay, now it's getting a little crazy?
Yeah, it's less about levels. Unfortunately, I'd love to give you a hard level. It's really more about the data that we look at. And so, we'll look at the option pricing. We'll look at some of the sentiment survey. And really, for us, what becomes interesting is if the sentiment is out of line versus the historical returns. And so, if we see a lot of bulls, but we really haven't made much price progress in the market, that becomes a dangerous sign. That's not happening here. We're still in good shape. We have about the same number of bulls that we'd expect given the types of returns that we've had over the last couple months. So I think we're still okay there. But I do suspect, about 65% of our sentiment indicators are flashing some type of warning sign. They usually are early at a top. So, again, I think seasonality is a more important indicator here than those sentiment signals. But it's certainly worth watching, and I think it will be important at some point in time, probably in early 2025.